All right, what's up, market maniacs? Dave here, bringing you the daily market narrative going into the 8th of August 2025. And today, we got to talk about the elephant in the room. Everyone's shouting recession and tariffs, but the S&P 500 futures, they're still climbing, up 0.33% last I checked around 11 p.m. Eastern Time. So, what's the real story? Let's get into it. Now, the story the mainstream media is trying to sell you, the one you're hearing everywhere, is that this market is totally schizophrenic. You've got mega-cap tech, specifically the AI plays, ripping higher, alongside whispers of Fed rate cuts. That's the good news. But then they pivot hard, saying the broader market is getting smacked by tariffs, weaker economic data, and this narrowing breadth concern. Basically, it's a two-speed market, and one of those speeds is stuck in reverse. Okay, let's cut through that noise. Bifurcated performance? Narrowing breadth? Look, when the biggest, most innovative companies on the planet, the ones actually driving growth and future earnings, are soaring, that's not narrowing breadth, that's focus. The market is efficiently putting capital where the growth is. And these Fed cut expectations, that's pure fuel, plain and simple. Yeah, tariffs are a headache, and weak economic data is always a narrative waiting to be spun. But when the leaders are leading this hard, it's not a market teetering on the edge. It's a market consolidating strength at the top. Don't get distracted by the noise from the periphery when the core is rock solid. So, let's check the scoreboard. S&P 500 futures climbing, up 0.33% at 6,387.25. The U.S. 10-year yield is nudging higher, up 0.57% to 4.24. Dollar index is down a bit, shedding 0.31% to 98.10. Gold futures are ripping, up a solid 2.68% to 3,491.50. WTI is flat, down barely 0.09% at 63.82. And Bitcoin surging again, up 2.40% to $116,879. So that's the scoreboard. Now, let's look at the headlines driving these moves. Tariff-induced stagflation fears hit Wall Street. Evening Briefing Americas, Bloomberg.com. First up, we've got the classic stagflation fears headline. Wall Street apparently getting hit. Look, this is about widespread anxiety that tariffs could trigger high inflation and low growth, hammering corporate earnings and investor confidence. Heard it before, but the market's still standing. Trump just signed an executive order that brings new investment options to 401ks. What it means for your money. CNBC. Next, a big one. Trump signed an executive order opening up 401ks to new investment options. This isn't just noise. We're talking trillions of dollars that could shift from traditional assets into alternatives like private equity or even crypto. That's a fundamental reallocation of capital, impacting valuations across the board. Keep an eye on that. India's 50% tariff is a U.S. sanction in disguise. Bloomberg.com. Next, there's India's 50% tariff, another escalation in trade tensions. This threatens global supply chains, jacks up import costs for you, and could spread protectionism. More inflation concerns, more hits to corporate profits. It's the trade war narrative playing out again. U.S. adds surprise gold bar tariff in blow to Switzerland, FT says. Bloomberg.com. And just when you thought it couldn't get more random, the U.S. slaps tariffs on gold bars. This just signals an unpredictable, aggressive U.S. trade policy, messing with commodity markets and global relations. Another potential driver for inflationary pressures down the line as costs get passed through. Forward look. Looking ahead, here's what's on my radar. Frankly, not much that's going to move the needle today or tomorrow. We've got the United States Baker Hughes total rigs count and the Baker Hughes oil rig count both dropping Friday, August 8th at 5 p.m. GMT. They're typically low-impact events, so don't expect any fireworks there. It's all about watching the bigger picture. All right, that's my take. If you got any value from this, smash that like button and subscribe for more daily, no BS market analysis. What do you think? Drop your take in the comments below. As always, this isn't financial advice. See you tomorrow.